CA Rudramurthy joining in at the moment. Good morning, CA. Let's start off with the overall trade setup. Given the fact that we did see quite a pullback rally play out yesterday above the 12,000 mark, what are the indications on the charts and what are your top calls?
See, I'm very bullish on the market, and yesterday's late short covering rally, what we saw, and also built up of fresh positions, and having this big event of RBI policy today, I'm very bullish on market. At least if someone doesn't want to buy, don't short this ferocious big up move, and charts are indicating it very clearly. Based on market profile and order flow, yesterday I could see lot of initiative buying happening with big short covering profile indicating a position of those formation, and on order flow I can see a lot of aggressive buyers entering into the market positionally. Also built up in open interest, PCR ratio, everything is very positive. This market can definitely move further up. And especially on Nifty for me, now having seen on Nifty future a clear breakout and having tested those levels of 20-day moving average, market can definitely now go back to all-time highs and even more moves from there. I won't be surprised to see levels closer to 12,250, 12,400 range to come in this series itself. Similarly, on Bank Nifty future, levels of 32,500 to 33,000 is clearly visible, and market is very positive. And a stop loss at 12,000 now on Nifty, and on Bank Nifty at 31,600 is very crucial. Stock specific, I'm very bullish on ICICI Bank. This stock has seen a huge addition in open interest on positive side, with stock moving on the upside. Targets of 560 can be seen with a stop loss of 510, and I'm also going buy on Kotak Bank. Clear breakout is just visible now on the chart, and accumulation patterns are very much there. One can look at initial targets of 1,700 on Kotak Bank with a stop loss of 1,620.
All right, going for the large cap banks, that's the strategy. We also have Amit Harchekar now joining in. And Amit, your recommendations, what is it that's catching your eye on the charts?
Good morning to all. I have two sell recommendations. First sell recommendation is going short on Maruti futures. Here the rationale is the stock has retraced almost 50% of the entire down move which started from 2017 onwards. We think right now the stock is poised for a major decline. The MACD has already generated a fresh sell signals at these levels, and adding to it, we have clearly seen a three black close pattern on weekly candlesticks bar. We think Maruti is poised for a good amount of decline even from current levels. In the very short term, we are expecting a target of 6,800. If that gets broken, we are looking for a target of 6250. The stop loss we are recommending on a very short term basis is 7320 on a closing basis. Our second pick would be going short on Larsen & Toubro futures. Here we are extending our short call which was given in the previous week. The rationale is L&T has formed a bearish belt hold line on monthly candlesticks pattern. That support was at around 1314, which has been closed, broken convincingly. So we think this stock is now poised for an immediate target towards 1200. Even if you see from a long-term perspective, the rising wedge has been penetrated quite well below 1350 levels. So we would again recommend opening up fresh short positions in Larsen & Toubro futures. Stop loss we are recommending is 1330 on a closing basis.
Right, recommendations on the short side. Let's get a move on and get in Kunal Bothra as well. And Kunal, it's the RBI rate policy that's not really going to be very market moving. Perhaps it may provide a little bit of clarity, but we're on a good terrain. Where are we headed from here? And share with us what exactly is it that your strategy should be?
So good morning, Avan. Good morning, everyone. I think yesterday's move on the indices was a very strong move. Now for Nifty, it formed a bullish piercing pattern. For the Bank Nifty, it's more or less a bullish engulfing pattern. Now generally, what does that mean? That yesterday's low on the indices, so 11,940 approximately on the Nifty and 31,400, 450 on the Bank Nifty. That is now a very important short-term support, and I think that support should not be breached over the next at least one or two trading sessions, and especially on an event day like today. So I think keeping that outlook, I believe I would go long on many of the large cap names. Two of the large caps which I would recommend. The first one is about HDFC. The stock is consolidating, but I think on the daily charts there is a moving average crossover as well as a breakout on the indicator, especially on the RSI, which I believe could probably have positive impact into the stock price. So this consolidation or this mild range could be over for HDFC. Should move up higher from current levels. Targets to be kept at 2360. Stop loss at 2300. And the second is a buy on ICICI Bank. and the stock is doing exceptionally well. Now, very importantly, is the data on the option side suggests that 500, 520 strikes for ICICI Bank saw a huge amount of call option writing, and that generally indicates that traders are more bullish into the stock going forward as well. So I believe ICICI Bank could rise from current levels as well. Very mild intraday upside, 544 target, which is what I would pan out for ICICI Bank. Stop loss to be kept at 520 mark.
All right, let's also take a look at what CLSA and Goldman are saying on RIL. We've got a whole host of reports coming in on that. Ajay, take us through.
Well, that's correct. Goldman and CLSA both overnight have come out with their notes on Reliance Industries, upgrading the target price to 2,000 rupees for CLSA, upwards of 2,000 by CLSA and 1,850 by Goldman. Goldman actually note is quite interesting because they not only say that the tariff hikes for Reliance Industries actually will be much more beneficial by adding in ARPUs compared to others as far as the geo operations are concerned. Not only that, they also go on to say that the new norms for refineries globally will benefit complex refiners like Reliance much better. So there's a twin benefit they are talking about. CLSA, however, goes on to say that the fair value of Reliance Industries is now edging towards $200 billion. Both indicate to sharp upsides in the overall earnings potential in the next coming quarters. And no wonder the stock did, after hitting all-time highs and crossing the 10 lakh crore mark, witness some profit taking, but probably it will excite the street the way these two positive notes are coming in today.
Okay, thank you for that, Ajay. Let's also go across to Pranay, who's taking a look at all the news around Indigo this morning and that capacity guidance. Pranay, take us through.
Well, Indigo has said that they are implementing the aviation regulators' directive on the engine change for their A320neo aircraft. Remember that this had come in earlier on October 28th, where DGCA had ordered the airlines using the A320neo aircraft, particularly having Pratt and Whitney engines, to fix them and replace them, also keep sufficient spare engines in stock by Jan 31st, or the aircraft will have to be grounded. So therefore, the airline is working hard on this front to meet the deadline, and they're talking to Pratt and Whitney for the same to meet those guidelines. But because of this, they see that there will be some constraint on their capacity growth, and therefore, as a result, they have lowered their FY20 capacity growth guidance to 22-23% from the earlier 25% that they had already revised in the Q2 earnings. At the start of the fiscal, it looked like 30% according to what they had said, but 2 quarters down the line, that is just last quarter, during the earnings, they had to revise it down to 25%, and now in these 45 days, again, you've seen another capacity guidance cut. So that is something which is definitely coming as a negative. Also, the management has said that Q3 profit, despite the expected MTM forex loss, will be similar to last year. So you're not really expecting any growth over there. On the unit revenue and cost front, that is also going to increase by about 4 to 5%. Now, this is similar to what they had indicated recently, where the yields are not improving as per their expectations. The demand is not so great, and therefore, with this capacity guidance cut also now coming in, it is an incremental negative. About the pilot shortage, they finally clarified that the situation should ease sometime by mid-2020. So it will be important to see as to how the airline stocks fare in trade today.
Okay, thanks for that, Pranay. We'll definitely keep our eyes on that. We've got Rajesh Sharma also joining us this morning, MD at Capri Global, in the news for buying a 4.9% stake in LVB. And remember, holding of over 5%, of course, will require an RBI nod. But Mr. Sharma, good morning. If you could talk us through, the strategic rationale behind the stake buy here.
This is normal investment because we found the price was attractive at about 13 rupees. So we have bought as our portfolio investment, and we have about 5%, not beyond 5%. So this investment is not done from NBFC. This is done from the family office.
Could you tell us what valuation has this 4.9% stake been acquired at?
So this has been acquired at various point of time, right from about 64 rupees to about 40. So it has been bought at different point of time at different price points.
Nikunj also joining in. I understand that this is a pure treasury transaction, but eventually, could this also be an indication that Capri Global is looking at becoming a small finance bank or a small bank?
So for a small finance bank, I think we have to apply to RBI, and that will not have anything to do with buying this stake because we have to apply a fresh license. We have not yet thought about that. I think we are still away from that. We have to yet grow our portfolio, reach at a size and a scale before we approach RBI for a small finance bank license.
Gives you confidence to even make a treasury commitment of buying 5% of Lakshmi Vilas Bank when we know that the bank right now is in a complete mess. The balance sheet is broken down, NPA is at a record high. For you to even commit 5%, I'm sure you must have had a thought and a thinking behind it. Why to your mind this investment is an attractive investment?
I think any investment, we believe that attractive at a particular price. So irrespective of company, good or bad, at price, it may not be attractive at a price when it becomes attractive. So we believe that at the price we bought in 3 to 4 years' time, it should offer a good value to us.
For the benefit of our viewers, now that you have 5% holding in Lakshmi Vilas Bank, if you want to increase your holding more than this, you will have to approach the Reserve Bank of India, right?
So we do not have any plan at the moment to go beyond 5%.
Shareholders of Capri Global, for the shareholders of Capri Global Capital, they should not get confused. What you are sharing with us and what you're telling us is that, look, this is a pure treasury transaction which has happened in your personal balance sheet and it's got nothing to do with your listed entity.
Yeah, no. We have not bought a single share in our listed entity. It is purely in the family wealth office.
All right, Mr. Sharma, I know you're traveling right now and yet you've accommodated this interview request, so really appreciate your time and thank you for the clarification.
Yeah, thank you. Thank you so much. Thank you.
Right now, before I connect with Devang Mehta, I just want to mark some interesting data. And the interesting data, what we have here is that how exactly the Indian large cap indices have moved ever since the trade war was announced. And trade war was supposed to be this big boulder which was supposed to fall on the world economy, and that could have impacted emerging markets like India. But frankly, what's happened from 1st of March 2018, ever since trade war has really been kicked in, you have a massive outperformance in Bajaj Twins, great outperformance in HUL, and Reliance has given a return of 64%. Now, Reliance, at the end of the day, also has a large commodity element, petrochemical and refining. And for a commodity stroke telecom behemoth to give a return of 64% in almost 2 years is a clear indication that some of the stocks have moved independently of the background noise. What also has happened during the same time is that the metal index has taken a huge knock. So if you frankly ask me, minus metals, none of the large sectors or none of the large sectors in India have been on the receiving end of the trade war. And why metal stocks are down, there are a variety of factors for that. I'm not getting in there. But this is just data that substantiates that how Indian stocks, sectors and individual companies have moved ever since the trade war or trade tariffs were rolled out.
All right. Let's also welcome in Devang Mehta this morning. Devang, good to have you with us. we've been looking at the kind of range-bound trade in the market, waiting to see if we'll manage to move ahead from here, watching out for the RBI policy today. So let's just focus on that first. What are you anticipating? Rate cut? Is it imminent? What will you be focusing on in light of that?
Good morning, Abha. Thanks for having me on the show. I think clearly, yes, there is a slowdown which nobody can rule out, and a slowdown is again is understated word which I am trying to use. There are many issues in the market right now. If you are into large caps, which Nikunj was talking about, some of the stocks you would feel at the top of the world. Looking at the Nifty index or at the Sensex, you would feel that you have done something relatively great, and you are in a bull market and a booming economy. But if you look at mid cap and small cap, it looks like a slowdown or a recession in your portfolios. If you have constructed only mid cap and small cap portfolios, yes, I think rate cuts. To answer your question, rate cuts seem to be quite imminent at this point. But after maybe 6 consecutive cut today, if at all it happens, I think economy is still not coming back on track, and a combination of fiscal and monetary combination would sort of do the trick, if at all. Government has been trying to take a lot of measures, but now again, markets being market are anticipating a lot from the budget and how the demand side is sort of spurred. So that is where I think a lot of people would be waiting and watching. But yes, rate cut seems imminent. There's a big slowdown. Mid caps and small caps should ideally rally once the economy comes back on track. But again, the large caps or the quality is where people are again starting to hide, and that's what we are seeing in the last 15 days, 1 month of trade as well.
All right. Okay, what about some of these auto names as well, Devang? Because we saw Maruti announce price hikes a little earlier in the week. We've seen Tata Motors come out with that now, big bump up in the stock yesterday. We're actually seeing a decent move on select names like an Eicher and a Bajaj, at least on the technicals. What's your view when it comes to some of the auto names?
I think there was too much of negativity which was priced in 2-3 months ago, when there was a talk about how the shifting would happen to BS6 and all this NBFC crisis getting a slowdown, plus 1.5 year of sluggish sales, and in fact a big slowdown. But since October, I think we have seen a good, decent sort of a bounce back from not only the stocks but also the sales numbers of some of this indicate that the slowdown was a little more temporary. Of course, it's too easy to call shots right now and buy these companies, but for people who have been holding auto universe companies like Maruti, companies like Eicher, I think the next 3-6 months are extremely crucial as how the migration to BS6 would happen. I think market is not worried much. It's not the time to sell. Ideally, it's time to hold. But to buy, we would want to have evident data for the next at least 2 or 3 months.
Talking about autos, it's a very interesting trivia question that we have for you today. And hear it out carefully. It's an easy one to guess. Which large cap auto company has created maximum wealth in this decade? Your options are A, Eicher Motors, B, TVS Motors, C, Maruti Suzuki, or D, Bajaj Auto. All you got to do is log on to the ET Now Facebook, Instagram, or Twitter handle and take the quiz. Guesses?
Easy one.
Yeah, very easy. So let's not give out the answer.
Very easy one. Yeah, some of these auto stocks have really created a lot of wealth in the last 10 years. So when we'll unveil the numbers, you'll be surprised with how multi-bagger auto stocks have been, at least for this decade. For next decade, I'm not so sure if auto stocks will be able to generate that kind of a momentum and that kind of an excitement. Devang, where are you telling your clients that they should book some profits now? Because it's been a good winter so far. We've had a good October, good November, and a good December.
Yeah, so yes, we have been actually advising to book partial profits, of course, because we know that wealth has only been created in the top 15 stocks, and again, it would sound very cliche if I start repeating the names of such. So just citing certain examples like Bajaj Twins, or maybe a little bit of even HDFC Twins, and somewhere down the line, even some large cap market leaders which we had bought earlier. There we are advising them to book partial profits. We don't want to get out of them as as soon book full profits, because the thing is that still there is a long time away that mid-cap and small-cap would have a big rally, and that will be the time when one needs to shift from large-cap market leaders to maybe even mid-cap market leaders. But right now, yes, we are advising at least to book 20-25% profits in stocks which have given you 30, 40, 50% in the last 3 months, 6 months, even 9 months. So that's where we have been asking them to book profits in a couple of NBFCs, even certain banks, and maybe a bit of building material stocks as well, and some MNC pharma companies where we have seen stocks doubling in the last 1.5 years.
Two stocks which were pretty active yesterday, and let's just address them. NMDC as well as Mindtree. Kunal, we were chatting about NMDC as well, and you were quite impressed with the long-term charts too. In the near term though, what's the right trade?
So I think the stock has shown a very good price, volume, and momentum breakout. So it's a combination of three factors. Price-wise, we've seen very good built-up into the stock price. And the trend started from August end for NMDC when the stock was at 75, 76 levels. From there on, it almost had a clean move till 110, 113 in a span of 2.5 odd months. Then a mild correction or a retracement, and now it's pullback or comeback of the stock price yet again. So this minor dip and then a resumption of the uptrend, I think is a sign that the stock could be gaining for much more upside from current levels. So when you look at a retracement of 10% approximately into the stock price, and if the breakout happens, that 10% dip generally gets replicated on the upside as well. So I believe NMDC could be a good chart from current levels as well. 114.5 is the swing breakout which I'm talking about. So another 1.5% higher from current levels. I believe the stock should be aiming for at least a 10% further upside on a positional basis.
Okay, let's take it across to Avan then, find out what some of the other mid-cap trades are this morning. Avan?
All right, let's get straight to it then on Trade Corner, where we're identifying the top mid-cap calls in the market. Okay, Kunal, start off with you.
Let's just explain the rationale on NMDC. That's the pick which I'm suggesting a buy 120 plus as the target and stop us at 109.
All right, let's get a move on then, and CA, run us through your recommendation.
See, for me, Ujjivan looks very good on the chart. In spite of NBFC as a sector doing bad, overall I feel Ujjivan, even the recent small banking stuff what they are getting out through, and on chart 325 has been a very clear breakout. So I expect Ujjivan to move towards levels of 400. So with a stop loss of 310, I'll be buying Ujjivan. Any dips to 325 to 35 will be a great accumulation zone. Even at current level, I will buy. Wait for dips to 325, 335 to accumulate more. Look at 400 as an initial target with stop loss of 310.
Oh yes, indeed. All eyes on Ujjivan. A buy call coming in from CA. And Amit, what's standing out from the mid-cap universe?
Well, I would recommend going short on M&M futures around 345. The rationale is the stock has completed a bearish triangle at around 361. And in fact, the stock was going through a good phase of underperformance within the financial sector. We are now expecting a minimum target of 325, which turns out to be the support of the triangle. If that gets broken, we could be looking for a target of 295. So overall, we think M&M Financials is rightly poised for a good amount of decline. So we would recommend a stop loss of 355 on a closing basis.
All right, continuing to remain bearish. That's the stance coming in. But let's get a move on. The top 5 stocks that you need to keep an eye out on. Telecom hogs the limelight. Reliance Jio has gone ahead and hiked their tariff plans by up to 40%. But still, the plans are said to be considerably cheaper as compared to its peers. Ujjivan, the small finance bank IPO, subscribed 165 times. This makes it the best IPO of 2019, even overpowering IRCTC, or overtaking rather. Gayatri Projects is in focus. They're going to sell about 6% in Semcorp India, and this stock is going to be a buzz on the back of that. Meantime, it's a bulk deal coming in on CEAT. India Opportunities Fund has bought nearly 3.5 lakh shares in the counter. Watch out for CEAT on the back of the fund action. And finally, there's UTI AMC, where SBI, PNB and BOB may be monetizing their stake in the counter. So watch out for all of these names in today's trade. They're your top 5 stocks this morning.
Okay, let's also tell you what's making headlines this morning. And here's fresh off the press from the Economic Times. First up, it seems that wind turbine maker Suzlon Energy and its bankers are working on a debt restructuring program to avoid taking it to the bankruptcy court for resolution after talks for stake sale with potential buyers collapsed. Suzlon has submitted a restructuring plan to the lenders, which will split its 7,000 crore rupee debt into sustainable and unsustainable debt. As part of its ambition to make Royal Enfield a global consumer brand, Eicher Motors is looking to expand manufacturing and dealership footprint for the company across the world, with a big focus in Southeast Asia and Latin America. The idea is to bring down the cost down in countries where the import tariffs are high. It is looking at partners who could share the investment and offer local expertise in such markets. And the government is working on a scheme to salvage the 24,000 megawatt of stress gas-based power plants built at an investment of over 1 lakh crores by importing natural gas and bundling the output with cheaper solar energy. The Power and Petroleum Ministries are working on a new proposal which will offer no subsidy and hopes to help operate the power stations at a 90% capacity by selling the bundled power.
Chakri joins us. Let's get a sense as to where markets are headed and what he makes of the current market mood. Chakri, I'm going to throw an odd one out at you. One stock which is sitting at which is showing relative strength is then sitting at a multi-week high is Bajaj Auto. Autos are in almost like a doomsday situation, but most of the auto stocks are back from the recent lows and Bajaj Auto is outperforming. First autos and then Bajaj Auto.
Yeah, I think Bajaj Auto still the valuations itself look fine. It's outperformed M&M as well as the other Hero MotoCorp is in fact still negative. So, but against this backdrop, I think they have made the right moves in terms of their future, which is the launching of the scooter and the EV scooters. And in the existing bunch of vehicles have found the right price points. So you're seeing a demand pickup at the low end of the bikes, which was down in the previous quarter. So against this backdrop, I think this momentum will continue with the BS6 anyway coming up in a couple of months.
I wanted to get your perspective in on Interglobe Aviation as well. The fact that they're going to be implementing DGCA's October 28th directive, and that will definitely be a bit of a revenue headwind. Having said that, given the duopoly in the sector with Jet and Air India, out of function, would you say that any dip in Interglobe should be bought into? Devang?
Okay, the question is for me. Okay, sorry. Yeah, so aviation, I think, has been a sector which has sort of, at least because of what happened to Jet Airways, Interglobe and SpiceJet gained market share for sure. And I think Interglobe, generally, we have been generally avoiding the aviation space for a long time. But for somebody who has a horizon of, say, 6 to 9 months, with some of the problems being out of the way and crude staying around, say, 60 to 65, does look like an attractive space. As I said, we don't buy it fundamentally for a 2-3 year horizon, but for 6 months as a tactical play, it sometimes fits the bill for clients who would probably want to make a quick buck in a couple of quarters.
Why is SpiceJet? I haven't spoken about it actually. Where is SpiceJet? Let's look at the stock. SpiceJet in last 3 months has not really given you great or handsome returns. That's SpiceJet intraday graph. Yesterday's SpiceJet was absolutely flat. In the last 3 months, 16% lower for SpiceJet. Kunal, they were supposed to be the outperformers. They have become the crash landers.
Yeah, I think aviation stocks surprisingly have not performed in the last 4-5 months, and I think it's both. I think Indigo and SpiceJet, both which are underperforming. Earlier we used to have Jet Airways, which used to be blamed, but Indigo and SpiceJet used to move up. But now I think Jet Airways, of course, it's now into not into the F&O segment, but Spice and Indigo both are showing signs of consistent downtrend. There was a mid rally in between for Indigo, I think a few weeks back, where the stock bounced up from 1400 to 1470, 1480. But that was very feeble in nature, because if the stock took almost 2 weeks to rise up, it fell back to those 1400 levels in a matter of 3-4 trading sessions yet again. So that goes to show that the trend is not strong for these stocks. And you could see more downtrend. SpiceJet, I believe, is corrected from 150 levels to almost 105, 106, which it tested, I think, 2 days back. So it's a very sharp correction for these stocks, and that generally indicates that they could be in for much more sharper trend reversal going forward as well.
Chakri, what's your sense on how aviation should be looked at, and especially in the light of this news on Indigo?
I think, aviation still is a trading sector, as I've always maintained and believed. SpiceJet is adding capacity at a far higher rate, expanding far faster, expanding into business class, which Indigo has not. And that will probably protect Indigo's margins to some extent. But, SpiceJet needs to take market share, and this is the time for them to do that. And so, yes, with, again, oil rising, I think it is a trading environment, and I would stay away if you are a long-term investor.
Chakri, I thought was supposed to be in a bear market. I mean, that's what everyone's told me. That's what everyone's discussed. And we've argued that there is going to be electric car, there is shale, there is demand drop. If oil is refusing to go above 70, and if that is 1/3 of the total fuel cost, or that's 1/3 of the total cost for any airline, I mean 34-35% in case of Air India, why should one be bearish on airlines?
Airline, because it's always been a function of, subject to the vagaries of oil price movements. On the other hand, is an inability to raise the tariffs, the air ticket prices beyond a certain level. And then you also have some amount of regulator oversee, which ensures that those price points don't move beyond that. And then you have, so against this backdrop of these two things, the airlines have historically not been good in their ATF purchases. So a combination of all these three factors makes it historically, not just in India, you look at other markets, airline stocks at best have been good positional trades and not long-term investments.
On that note, I'd like to thank Devang Mehta for joining in on the show. But we've been talking about how active the primary market has been off late. It seems that UTI AMC now may decide to go public. Let's take it across to Pankaj, get in more details on this one. Pankaj?
So, these are initial talks that we are picking up about UTI AMC going public, and this would be the third AMC if it actually goes through. SBI, which is one of the primary shareholders, we'll tell you more about other shareholders as well, has indicated that they would be looking to offload their stake about 8.25%. Now, what we are picking up from our reports and sources is that 30% could be offloaded in the market by various stakeholders. Valuations could be as high as 10,000 crores. Again, there is no, if and but about the valuations at this point of time, or nothing has been finalized. But when we look at the company, 1.6 lakh crores of market cap, 7th largest AMC, 10 lakh plus in terms of investor base is what this company has. They have a fantastic branch network, as well as, it's been one of the oldest AMC in the country. So a lot of things that go in along with UTI AMC. Tough to talk about valuations at this point of time, but you look at some of the shareholders. LIC is one of the top shareholders. SBI is among the top shareholders. BOB is top shareholders. PNB. So all of them, sum of part valuations, probably will come through. T. Rowe Price owns close to about 26%, which of course is a US-based investors. We don't know who's selling what. It's just SBI, which has indicated that they would be looking to offload 8% and initiate the IPO proceedings of UTI AMC.
Okay, thanks for that, Pankaj. Big plans coming in there as well for UTI. Chakri, we've actually been talking a little bit about how the recent spate of issues have had, fairly enthusiastic appetite, even if they may have been smaller sized issues in the financial space. Nonetheless, markets seem to have snapped them up. Have you been following that as well?
Yes, indeed. And in fact, CSB, as we know, has had a very good listing. And even after the listing and the 50% pop in price, it's probably trading at about 2.6 times book. This is a bank which is on the turnaround, where its GNPAs are coming down, net NPAs are coming down, its mix is improving towards retail. And so, the case is building up that valuation can sustain at even at the 2.6, 2.7 times that it's trading at. Now, so from that perspective, as long as it continues to turn around, the valuation will hold up. Second, Ujjivan, now it's oversubscribed phenomenally over 100 odd times, but it's still trading at the valuation band of the IPO is still trading at a huge discount to Bandhan Bank or Credit Grameen. It's a good 30-40% discount. It's trading at 2 times book, and whereas these other companies are trading at about 4 times plus book. So against that backdrop, again, I think on listing, you will see Ujjivan, if the overall market holds up, you will see an extremely strong uptick on the listing day and also find support thereafter.
Okay. Telecom, that's going to be another segment which is going to be in focus today. Reliance Jio has hiked tariff by up to 40% on expected lines implemented come tomorrow, that's December 6th. Remember, both Bharti as well as Idea as well over the weekend did announce the tariff hikes. Aside of that, Bharti, the board has approved raising about $3 billion in equity as well as a bond issue. They're going to be raising $2 billion via one more QIP or OFS, or perhaps a combination, whichever instrument they actually choose to adopt. And they're going to be raising $1 billion in debt. The funds are likely to be utilized to, of course, pay off the DOT and its dues, which are estimated at a sizable 35,586 crore rupees. Chakri, a little more hopeful of maybe the prospects for Bharti after this fundraising that they've given an enabling resolution to?
You know, after this fundraise, the Bharti's leverage will come down quite decently. It will come down from about 4 times to about 3 times. And plus, you have the tariff increases going on. And I think we'll expect to see some more tariff increases. So a combination of both these things will improve the balance sheet fairly strong. Yes, it'll still be a high debt company at over 3 times debt, but it's improving. So against this backdrop, the fundamentals are improving, a combination of tariffs and this capital raise, and I would be buyer at current levels of Bharti.
Well, I'm going to go back to something which everyone has a view on. Good old Yes Bank. Who wants to start? Chakri, Kunal, Aisha, Abba. Who wants to start with Yes Bank?
Well, going by the tweets, they're almost calling it no bank. But anyway, besides that.
Even the data is very similar because, 2 days back we were saying that how there was a huge amount of short built up, 70, 75. Yesterday, right from the start of the day when the stock was at 57, started off I think 4 or 5% down, there was an unwinding which happened. Now the unwinding could probably be one of the reasons why, because the stock came into the F&O ban because of that huge number of shorts. So maybe there was a compulsion square off into these shorts. But both on the option side as well as on the future side, there was a big unwinding. I think 15,000 contracts on the futures was unwound, and in a combination of options also suggests almost 12,000 to 30,000 contracts getting unwound. So I believe now the stock is trying to establish a range. 60 to 70 could now be a range for Yes Bank. 70 would be, again, as I was discussing yesterday, would be a bit of a difficult task for the stock to break. It needs a lot of positive triggers, but if that happens, then it could lead to a huge amount of short covering post 70 as well.
Chakri, I'll not get into Yes Bank, but I want to get into the impact of UTI listing on SBI or BOB. SBI and BOB are looking at monetizing whatever they can monetize. SBI is planning to take the credit card business public. They have taken their life insurance business public. They have plans to also take the general insurance business public. So looks like banks are doing whatever it takes to raise capital or monetize the market.
Yes, in fact, all these banks require capital. SBI doesn't need capital, but all PSU banks do need capital. They need over 50,000 crores in the coming year. Now, against that backdrop, you have an SBI, which is actually a very strong bank in terms of capital, but is making use of a timing because, all the AMCs, we've seen the valuations of HDFC as well as Reliance Nippon valuations trading at fairly high levels, and so from offloading its mutual fund business, a stake of it would gain at good valuations. On the other hand, credit card is a brand new growth sector in India, post demonetization, millennial using more credit cards versus cash, etc. So that is a growth path, and therefore that will also command a good valuations. So against this backdrop, I think you will see an insurance you mentioned, yes, and that's also a growing space. So all these 3 areas will do good for the valuation of SBI in particular, and the space in general will see good response from the IPO market.
Fair enough. Kunal, just on the charts, just want to touch upon a Mindtree, given the move that it saw yesterday. How is it looking to you?
It's, yeah, I think the stock gave a price volume breakout yesterday, but I think many of these other IT names, especially I think Tech Mahindra, HCL Tech, TCS, Infosys, they are more formidable charts. I think Mindtree has been more or less a stock which has been into a range. So yesterday was the first day we saw the stock breaking out of almost a 4-month or a 3.5-month range. But it needs more confirmation because it's a stock which goes through very lesser days of momentum and more days of prolonged consolidation. So we've seen 2 days or 3 days of rally for Mindtree. Yesterday, of course, was one of the better days because the volumes and price also shot up to fresh swing highs. But again, as I said, it needs more confirmation. If it moves up another 15-20 points, comes back to that 770, 775 range, then you can expect that this 5 months, 6 months consolidation, which is more of a bigger consolidation, is over for Mindtree, and it's now going to that range shift behavior. But as of now, I would just about wait and watch. Maybe about 775 is where I would initiate a fresh trade on Mindtree.
Okay, let's also tell you what else is happening across the nation before we get back to stocks. And amid the ongoing debate, the Union Cabinet yesterday approved the Citizenship Amendment Bill. The bill seeks to grant citizenship to non-Muslim refugees from Pakistan, Bangladesh as well as Afghanistan. The bill will be taken in the Parliament next week, where it is expected to face stiff opposition. J&K Lieutenant Governor has said that internet will be restored in a phased manner as soon as the situation improves a little more. The administration has already discussed the modalities for the same. Internet services were snapped since August 5th, when Article 370 was abrogated in the state. Crucial by-polls are being held in 15 assembly constituencies across Karnataka today, with the ruling BJP government hoping to win at least 6 to retain its majority in the 225-member assembly. As far as many as 37.78 lakh people are expected to cast their votes. And here's a look at all the news across the world in pictures.
Comment from you. These days we are looking at stocks which have been best outperformers for a decade, 10 years. iShare is one of them. We looked at City Union Bank, HDFC Bank. Which one would you bet on, not for next 10 years, but next 3 years, where you would say, look, I'll buy today. I will not care about trade war. I will not care about what RBI does today. I will not care about what happens to fiscal deficit, but I will buy that stock and not sell it for 3 to 4 years.
Is this for me?
That's right, Chakri.
Yeah, okay. I think even we might as well pick with one of the largest companies in India, Reliance Industries. It has all things going for it in terms of Jio is now will be more profitable earlier than expected because of all these tariff rise. His retail business is doing great, and its traditional refining and E&P business is chugging along. So against that backdrop, I think the stock can return. You could say that safely about 20-25% CAGR over the next 3 years. So kind of in that rate, it'll kind of double over the next 4 years.
Right. We'll let you go, Chakri, on that note. Thanks as always for taking the time out and